And next up, I'd like to invite Paul Bennett, Managing Director of Medallion Metals, to the stage, please.
Coming, Paul. Thanks for the intro, Paul. Thanks to the organisers and sponsors for making this possible, and thanks to everyone who's in attendance to hear the story this afternoon. Medallion's an advanced gold and copper explorer. We've got a portfolio of assets with great potential down in the southern goldfields of Western Australia, and it's there that we've grown resources to 1.6 million ounces gold equivalent. We've also completed a pre-feasibility study recently demonstrating the technical and commercial merits of that metal, and it's our ambition now to progress from explorer to developer and then on to producer. I'm going to talk to you today about what the Medallion team's doing to make that ambition reality. So, junior gold equities, this is a tough and crowded space. It's been that way for a period of time. We're competing for capital and attention with a host of other explorers, and I think these points, these broad attributes, are what set us apart from a lot of the competition. First and foremost, it's the geology, it's the location. We control the majority of a greenstone belt in Western Australia that's proven to be fertile for gold and copper. These assets are rare, and we're just scratching the surface of this one. The location's outstanding. There's two major resource projects underway in the local government area that demonstrates that you can permit, build and operate a mine in Ravensthorpe. We've got scale and we've got grade. 1.6 million ounces gold equivalent at 2.6 grams per tonne. That resource is shallowly drilled, it's at surface, it's open in multiple directions, it continues to grow as we continue to invest in it. The asset's de-risked. We're on granted mining leases. We are clear from an Aboriginal heritage perspective. We've advanced the permits substantially, and we have completed that PFS demonstrating we can commercialise that metal. We're well funded. We're extremely active on the ground. 54 kilometres of new drilling done since we listed in 2021. Plenty more to come to grow those resources and advance the exploration pipeline. And all of that gives our shareholders optionality on near-term production and new discovery in a record $8 gold price environment. So just touching on corporate, 308 million shares out, market cap approximately $19 million. We've got $4 million of cash and a $1.5 million receivable that's headed our way next year as a result of us doing a rental deal with our neighbours on an operating camp that we have in Ravensthorpe. We've got an investment in our neighbours' nickel search. There's a small loan to our major shareholder. It's reasonably benign, only repayable in the case of a change of control event or if we make a decision to build the mine at Ravensthorpe. So with the market capitalisation, if you adjust for the cash, the debt, the listed investment, it backs out an EV of $15 million or $13 an ounce gold only. That's a steal given the quality of that metal, and I'll come back to valuation on the next slide. Just in terms of leadership, these names won't be well known in this jurisdiction, but these people are at the forefront of the industry and capital markets in Australia. John, the chair, he's a long-term prominent board member at Northern Star. He's been the chair of a number of successful stories at the junior end. Tony James, the other Ned, he's built 5 mines that I know of. He's putting the finishing touches on his 6th one at Abra at the moment. So that experience is a great overlay to a really hungry, young, capable senior management team that's driving the results and the growth at the assets. So back to valuation, here we are amongst the basket of our peers in Australia on the ASX. So that peer group is ASX listed explorers whose principal asset is gold in Western Australia at a pre-production stage. Now, we screen very well in terms of scale and we screen very well in terms of grade. So on the face of it, we're located at the wrong end of this curve. Now, that situation has persisted for a period of time now. It's extremely frustrating. We can't do much, we can't complain about it too much. The market's got its reasons. All we do is continue to focus on de-risking and growing that metal. And I think as we continue to do that, build confidence that there's going to be a mine built at Ravensthorpe, then we begin to move to the left-hand side of this curve. Now, you don't have to believe me. There's 2 independent analysts that cover us at the moment. They're probably reviewing their targets based on the PFS that's just out, but based on their most recent research, their consensus pricing would back out an EV per resource ounce of $70 an ounce and put us at the other end of this curve. Now, even if they're half right, it's apparent that Medallion represents a pretty compelling opportunity from a valuation point of view. So focusing on the flagship asset, the Ravensthorpe Gold Project, Medallion's got the dominant land holding in the Phillips River mineral field, and critical to that are those tenements that straddle the Annabelle Volcanics, and they're mapped in yellow on this plan. Now, it's those rocks that have hosted all of the historical production and are host to all of the known prospects and all of the known resources. They're also host to the pegmatites that Allkem are mining at Mount Catlin. Now, there's been 130,000 ounces of gold and 20,000 tonnes of copper metal produced from this area over the journey. It's come from 3 clusters of mines at Ravensthorpe in the north, down at Desmond Elverton on the southeastern flank of the belt, and then at Cundup at the southern end of the field where the Archean dips beneath the Proterozoic and continues on to the south. Now, interestingly, that historical production is a rough 50-50 split between the gold and the copper in terms of gross metal value at today's prices, and we think that copper is going to have an increasingly important role to play in the Medallion story as we move forward, and we're certainly seeing that in the drilling at depth at Cundup. Now, it's at Cundup that the Cundup Mining Centre that the bulk of the activity, the bulk of the drilling, the bulk of the expenditure has taken place, and this is where the bulk of the resource growth has come from. We're really focused on maximising dollars into the ground here to increase the value of that asset for our shareholders, and I think, as you'll see, if you invest in this asset, it certainly delivers. So zeroing in on the Cundup Mining Centre itself, I'm conscious of the time and I don't want to get bogged down in the technical weeds here, but Cundup gold and copper mineralisation and the mineralisation across the field more generally is not typical of your WA shear-hosted gold deposits. And the principal difference is that we've got that significant copper credit. The most analogous project we can see in Western Australia is Silver Lake's Deflector project. We see a lot of similarities between these two assets at similar stages of life. Now, Deflector was built in 2017. It's been a fabulous success story. It's produced approximately 700,000 ounces of gold, a significant amount of copper. It's more than replaced resources. It's more than replaced reserves. And importantly, it's generated a tonne of excess cash. So it's that kind of performance, it's that kind of outcome that we're seeking to replicate here at Medallion. Now, Cundup itself, it's a strongly mineralised, moderate grade gold and copper system that occurs in multiple orientations. It's got low grade variability, it's got low geometric variability. If you look at our historical drill hole announcements, you don't see bonanza grades, but what you do see is consistent mineable grades and widths, 2, 3, 4, 5 metres at 5, 6, 7, 8 grams per tonne. We think that leads to a lower risk resource estimate and then by extension, a lower risk mine plan. The deposit's shallowly drilled, 100 metres average depth of drilling, deepest hole into the system 370 metres. The system's open. The ounce per vertical metre profile here, it averages 4,000 to a depth of 300 metres. It peaks at 7,000, 100 metres below surface where the drilling density is at its greatest. Now, we've been adding ounces and metal along strike and at depth. If we can achieve and maintain an ounce per vertical metre profile of 5,000 to a depth of 500 metres, which is still shallow for an Archean gold lode, then this area starts to get really interesting in terms of its scale and significance. There's also the opportunity to find additional lodes within that granted mining lease boundary there. Those lodes are projected to intersect at depth and in some cases along strike. There's the potential to find lodes beneath the remnant Proterozoic cover, and then we know there's gold in the bounding tonalite. So there's all of those opportunities exist within a 1.5 kilometre radius of where you would locate a processing plant to treat those existing resources. This is a great address. It's got great potential. We think multi-million ounce potential over time with continued investment. That's the arm waving. What have we actually got on the books? We've updated the mineral resource in February of this year based on 44 kilometres of new drilling. Gold resources now stand at 1.3 million ounces, copper at 59,000 tonnes. On a gold equivalent basis, that's 1.6 million ounces. We've over doubled the metal inventory since we got going in 2021. Confidence is relatively high, 63% in the indicated category. Roughly 3/4 of that metal is within 150 metres of surface, so potentially available for open pit mining. The grades have pleasingly held up. Gold is 1.8 in the pits. The underground gold domains are going at 4 grams with a significant copper credit there. Gold's driving the project economics at this deposit, the copper's enhancing it, and increasingly so at depth. Every metre that we drilled added 20 ounces into the resource estimate. And every ounce that we added cost us $15. That was a great business when we were valued at $30 an ounce. You could find it for $15 and get valued for $30. Not so attractive anymore at $13 an ounce. And it's one of the reasons, it's not the only reason, but it's one of the reasons why we pulled back on the extensional drilling program and focused on de-risking these ounces that we've actually got on the books. And that took the form of commencing the pre-feasibility study, which we launched in March of this year and then completed last month and reported to the market. Now, I should say now that what I'm talking about here, everything's in dollars, and it's important to note too that the Australian dollar gold price is above $3,000. It's currently sitting at about $3,050. 2 weeks ago, it hit a record, all-time record of $3,178. So the project, a very strong result that demonstrates the asset can produce 780,000 ounces of gold, 16,000 tonnes of copper metal over a 9-year life. That's a 92,000 ounce per annum run rate on a gold equivalent basis over those 9 years. The pre-production capital is $163 million. The all-in sustaining costs $1,600 an ounce, dollars net the copper credit. We used macro assumptions that are approximately a 10% discount to spot at the time that the feasibility study was finalised. That yields that $560 million of free cash after tax and the internal rate of return of 35% per annum post-tax. So a very strong result. It's an important milestone for our shareholders and our team. There's been a significant investment in this asset since 2021, and you'd naturally expect that the asset's progressed, grown and de-risked, and that's exactly what we're seeing here. We doubled that metal content. We've demonstrated that that metal can now generate a strong return over a long period of time. We think it's a compelling argument that there's going to be a gold and copper mine built at Ravensthorpe and that we should continue to forge on towards that outcome. So the opportunity at Medallion's really starting to take shape down at Ravensthorpe. We've got that feasibility study demonstrating that that metal that we've got there can be commercialised, generate strong returns. We've got optionality to continue to extend and convert the existing resources and look to increase the length of the mine plan and increase the production rate, or both, to enhance those returns of the asset to a greater extent. And then the near mine opportunity, the regional opportunity, they're potentially game changing. We're really just scratching the surface of the Kundip mineralised system and then the greenstone belt more generally. So the Ravensthorpe Gold Project, inclusive of the cash generating camp, that's the core focus of the business. So that will be focused on going forward. There's also the portfolio investments, our investment in Nickel Search, that gives our shareholders exposure to new nickel sulphide discovery and new lithium discovery out in the Carlingup terrain to our east. We're very excited about what the management team there is working on in relation to a new lithium terrain at the northern end of those tenements. Watch that space. And then there's the Jerta Cut-Up project. That's over half of our tenement package. We don't talk about it often. It represents the entire accessible portion of a Proterozoic sedimentary basin, which has proven to be fertile for SEDEX deposits, as evidenced by Trilogy, JORC compliant resource shown there. That's a significant accumulation of metal right at surface, and that bedrock opportunity has been under-tested. So we think we've got the very strong foundations in place, multiple routes to value to return Ravensthorpe to being a meaningful gold and copper production centre in Western Australia. We think if we achieve that, it'll be to the great benefit of our shareholders and the local community. So I'll wrap this up. We think Medallion represents a compelling opportunity for investors who are looking for exposure to advanced gold and copper exploration in Western Australia. The business is well run, it's attractively priced, it's well funded. We own assets in a great location with great potential in a great jurisdiction. If you haven't done so already, I'd encourage you to take a closer look at Medallion, visit the website, follow us on social media, contact us directly, arrange a meeting. We're always eager to talk about what's unfolding at Ravensthorpe. Thanks everyone for your time.
Thank you, Paul. Quick question. You mentioned in an earlier slide there's, I think it was 13 pre-production companies in Western Australia. What's your view on the potential for consolidation amongst you guys? Yeah,
that peer group, in my view, the vast majority of that metal is going to end up in a next door neighbour's processing plant. So that's one of the drags on our valuation, I think, is that we are over 300 kilometres from the nearest gold processing plant and we must build our own facility to treat that metal. So that's a capital hurdle that our peers don't necessarily need to jump over. So I think most of that metal is going into their neighbours. But more generally, everybody's talking about the inflation impacts of input costs in the industry in Australia at the moment, and I'm sure this is probably the case elsewhere. But that's half the story. The other story is that the assets that the producers are running at the moment are getting old, they're hard, they're deep, they're mining the peripheries of the ore body, and that's another reason why those all-in sustaining costs are creeping up. So one way to deal with your portfolio and try and get those costs down is to look at opportunities like this, which are shallow, relatively low strip, moderate grade, lower risk, and that can help them address that issue.
Okay, well, Paul Bennett, thank you very much.
Pleasure, thank you.